Good evening, ladies and gentlemen. Today is the 17th of November, and today is the Wednesday before the expiry. Generally, Wednesdays tend to be a little bit volatile, but more or less today was quite sideways. And I think the data also was a little bit easy to read. I tweeted my view in the morning, and more or less, I think it held in line with that, so I was quite comfortable. The issue was in the morning, I had the quarterly settlement, and because of that, I had to trade a very small size, and then I had to go to the bank, so I closed my trade, and then came back from the bank, and then when something seemed to be good risk reward, I entered that trade with a good sizing, and basically trailed that entire trade till the almost the close. Just as we were testing the swing low around 1250, I decided to call it a day because beyond that my potential reward wasn't great, and the risk could be have been on the higher side. And also once the liquidity gets killed, it becomes difficult for me to exit, so I would rather exit making less 1 point or 2 points than giving up more than that. So it was that kind of a day. I think more or less what is happening right now is that I think this is the third consecutive expiry where between 17,800, 18,100, that kind of a range what will be there. But there is a huge amount of volatility in between. So accordingly, one has to pace themselves for that. So yeah, my voice might not be great in this. I've been keeping a little unwell, so I've been taking a very relaxed couple of days. And yeah, I'll also be rolling out a positional model that I'm going to be deploying most likely from the next week. I'll make a separate video over the weekend, what exactly it is. But basically, what I'm going to be doing is diversifying some of my funds from purely intraday to a little more positional trading. And the main reason for that is at this point, there are a few things that are very different. So as I continue to scale, I can't keep doing it intraday because execution wise, it's very difficult. There's a lot of slippage related issues. There's a lot of what if the terminal breaks down kind of an issue. There is also I used to previously always use stop loss markets in my trading, but I can no longer use stop loss market because I don't know that 20 rupee, 30 rupee might exit at 100 rupees, and that is something I cannot afford. So all this being the case, I'm working on a very interesting positional model, and it's going to be pretty straightforward. And yeah, I'll bring it forward to you once I have the whole thing perfectly made out. So thank you so much for watching. I will catch you at the expiry tomorrow. Take care. Bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Hi ladies and gentlemen, the time is 12:15 and I have actually just entered my position now. So just here for about 27 rupees, they're about 27, 28 rupees into the IV spike that took place midway. I've entered the 17,750 and 18,150 triangle. I'll go over exactly what the idea is, but why am I entering so late? In the morning, I took a small trade with about 5,000 quantity because almost like 1/3 of my margin was transferred back to my account. I exited that trade in the morning because I had to then go to the bank. I had to issue a check to get my margin back. So I got my margin back in my account only after about around 11:45. And as there was a down move, there was a little bit of a spike in IV. I entered this position. The idea is this, which I entered about 27, 26, 27, most likely will close under 17, 18. So it's a good 10 points that it can fall off. Of course, I'm doing this with hedges, so my hedges will also fall off. Last night, I had carried 17,700 and 18,250 with a part of my margin because I wanted to avoid the settlement. And yeah, so basically at this point, what is happening is, I'll just go over. We had a gap down. We had a gap down in a situation where there weren't that many longs in the system to begin with. The PCR was 0.6. So generally, when you already have a negatively positioned market, FIIs are positioned negatively, pros are positioned negatively, into the down move, you'll actually see that the dip gets bought. The reason for that is because people are booking their profit. They're getting more than 50 points. So book their profit, that led to whatever amount of short covering. And then after 18,000, because it became very apparent from the OI as well, 18,000, 17,900. from the first 5 minutes of the market, these are the two strikes that have seen maximum writing respectively on their individual side, is because that's the range that people are expecting for tomorrow's expiry. And yeah, so at this point, my idea is to trail this position as the day goes on. Basically, just entered it now anyway, so we'll keep you posted on where that goes. And the idea is we will not break 17,900 on the downside or 18,000 on the upside. And if that starts to happen, then I will start to take risk off in whichever direction we are moving. So that's the plan. Also, so a couple of things, and I'll probably go over this in a separate video, but I'm going to be rolling out a new strategy. I'm currently working on all the ins and outs of it. It's a very basic strategy, but it's something that I'm going to be rolling out from the coming week. It's a fully hedged trade, and I will be taking trades like that with quite a considerable size of my account on a weekly basis. So I will go over that trade. I'll probably make a separate video to go over that trade. So we'll keep you posted. As of now, it's 12.17. Potentially can make, I mean, if we perfectly hold range, can make easily about 8 points on this position. So we'll keep you posted. One more thing just to point out is this India Bulls housing finance trade. So, I mean, I guess my mistake for trading this stock, but as soon as I entered it, it went into trading ban. It's been in trading ban the entire time. This is at the money, right? So my hedge is now at the money, and yeah, there's no liquidity at all in this. Yeah, it's just really no liquidity here. So it looks like most likely I'll be booking max loss on this trade, and that's fine. Like, I mean, I can't really do too much about it. As and when it gets out of trading ban, I'll see what opportunity I have to exit this. I mean, the sooner the better, but it's going to give me a max loss. I mean, this is my max loss, so it had a good risk to reward when I entered. It didn't work out, and like didn't also it went also into trading ban, so no opportunity to make any adjustments also. So just book the loss, call it what it is, and do that. Okay, the time is almost 1:15, and so ITC, the sudden surge, huge volume spike, completely massive breakout by ITC standards, moving 6 points like this is uncharacteristic, but huge up move on ITC. Just as we were on the Nifty, we were heading towards what looked like to be the day's low. Bank Nifty was testing 38,000, and at that point suddenly huge buying. Lot in ITC, TCS also moving up, Infi moving up. Now the bank's moving up. So into the down move, I mean, since my entry, this position has been doing all right. So into the down move, these went up till 15. These went down to 10. Now into the up move, these have gone up to 14. These have gone to 10. So this position is gaining. Of course, the hedges are losing. The hedges are losing a good 50,000. And this position is making about a little bit over 90,000. So that being the case, okay to continue to hold for now, keep trailing in. As long as we close between 17,900 and 18,000 for the day, both of these will close under 10 rupees, probably around 8-9 rupees each. And there's still about 2 hours 15 minutes left to go. So let's see, as long as we hold range of good, nothing to do. And yeah, we'll keep you posted. Okay, big short covering move on the call side. Calls are now at 15 and put at 8.6, right? And we are back at 18,000 on the spot, and now we're in the green again. ITC is up 4%. Bank Nifty is up 200 points from the day's low. Steady up move, and continued up move. One thing is in this entire thing, not seeing too much of put writing, but basically my stop loss on this is about 19, which will hit if we make like another 20-point up move from here, at which point I will just scrap this trade. I'll exit the whole trade as a whole, because beyond that it's just like, because okay, wait, I'm not able to pull up this screen. Let me drag this window here. basically all day there's been huge writing of this 18,000 call, 18,100 call, yes, 18,200 call, and there has been some amount of writing of 17,900 put, and not a lot of writing of 18,000 put also into this drastic up move. But given all the calls in the system, there is a real threat. That I mean, it's very possible that if people really get spooked on the 18,000 call, make another 100-point up move from there. So that is a possibility. Of course, a lot of this call expansion is that sudden spike in fear on call shorters. Obviously, I mean, naturally with that kind of an up move, and everything is participating except for Reliance. So I would still think we would close somewhere around 18,000, inside the 7,900, 18,000 range as of now. Just going by the fear on the call side, it shouldn't get spooked out of the position. And because before that we were trending down, the puts had enough value to give up into the call expansion. So all that being considered, for now, I'm going to leave this position as is. If it heads to 19, I'm just cutting the entire trade. Entire trade will be done, and nothing beyond that. Okay, so not a lot happened. We had an up move, and into the up move, the idea was it's not being supported by Reliance, and given the kind of shots in the system, will most likely get completely defended and will not have to worry about too much upside beyond 18,000. Did not see too much put writing at 18,000 or above as well into the up move, which is why I held the position more or less exactly as is. Never really went into any loss as such, because the put side premium initially was enough to cover for the call expansion. And now the idea is there's about 40 minutes left to go for the market. Trailing a stop loss of about 1.5 point. Basically, if these go to 12 or these go to 12, I'll just start exiting the entire position, and that'll be the end of the day. Some amount of selling, but so far still above this swing. So somewhere around this swing, I'm quite sure I'll get stopped out. Okay, the potential risk and reward is not so good anymore, and there's always the chance that liquidity starts to die into a move. So I'm going to slowly start exiting the position. Reason for this is, you take this low out, suddenly there can be all kinds of like spiking on the put side, and it's just not great. I need to kind of mitigate that risk of that low being broken and seeing some kind of a sell-off into the last couple of minutes. I really can't gain that much more from here. Maybe I gain another 2 points, but it's just not worth the headache. This is why I'm exiting. Once this swing breaks, that gives you all kinds of unnecessary pain. There we go. So 2.76, that's pretty decent outcome, and I don't want to deal with this. This like here, and then a little bit of a slide towards 17,900. We start testing. There'll be a big put side IV rise, and yeah, it's just not worth. It's trading at 20 already. It was trading at 19 when I started to exit. So that's about it. This India Bulls housing finance position, I really at this point have accepted max loss. There's nothing I can do about it. So that is that. Rest of the covered call positions more or less are faring all right. I was hoping there'd be some kind of a big IV spike on ITC and later data call options. There wasn't one. And if that happens, then at least I can roll my ITC call forward, because this not too. I want a nice green day where I can roll forward all of these November call positions to December. One more thing to add. I've just closing big weakness, right? Complete. I mean, I exited around here. From there, just steady selling and a lot of weakness in Reliance. And what I've done is I've used this kind of as an opportunity to get a nice trade on Reliance. What seems like a nice trade, at least. So let me just go over that. So this is the covered call position. Don't need to look at that. Basically, just as I entered, because of lack of liquidity, it'll show mark-to-market loss. I just entered. And the idea is that this position will give me a very good profit if Reliance in December closes between 2,500, 2,600. I've entered this iron condor in a very bullish manner. So I've entered very close to the lower break even. Lower break even is not very far. And yeah, in case we make an up move, then that really benefits my position. In case we make a down move, I mean, I have fixed loss because I can't really lose too much when my purchased put is just 60 points away. So max profit of 3.37, max loss of 1.63, good risk to reward. Some kind of bearishness is happening in RIL. I think at some point it'll pick back up and it'll move almost 100 points immediately. So this trade will benefit me. I will let you know how this goes. That's about it. Thank you so much for watching, and I'll catch you tomorrow for the expiry. Take care. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.